we have Nagaraj Shetti, Technical and Derivative Research Analyst, HDFC Securities, joining with us. Nagaraj, good afternoon. Thank you so much for giving your time to ET Now. As we see, there's a lot of stock-specific action on the back of results, but at the same time, the action on the indices is still missing. It's a quite range-bound market, at least Nifty trying to hold those gains of 24,850 and above. But what's your view on the stock-specific front? What are the trading ideas from your end?
Hi, good afternoon, Nancy. Nifty has been a range-bound action, but what we can also in the last couple of sections is a little bit of turnaround from the lower levels. What we have seen over the last few weeks is a continuous downtrend from the higher levels. It was merely a gradual downtrend from the lower tops and bottoms. But yesterday's bullish engulfing pattern and today's consolidation and just moving above from the consolidation is indicating there is a possibility of some more upside in the near term. Once it moves above 24,900 levels, we could see Nifty reaching towards the next hurdle of around 25,250, 300 in the next few sessions. So on the stock fronts, we have seen some healthcare pharma stocks looking very well in today's sessions. I have two stocks from that segment. First one is Sun Pharma. Chartically, Sun Pharma has been in a larger consolidation phase, where technically we can say some kind of accumulation was going on. Currently placed at the higher end of that consolidation, around the 1730, 35 levels. So one can look to buy at this point of time, currently trading around 1733, and the upside target would be around 1830. One can place a stop loss at 1680. Second one is PI Industries. PI Industries was moving in a larger range bound in the last 2 weeks. It was after a sharp upside momentum for the past few months. The trend remains intact. The recent range bound action seems to have broken above the recent hurdle of around 4,200, currently trading higher. So now trading around 4,316 levels, one can look to buy at this point of time. And the upside target would be around 4,570, and one can place a stop loss at 4,150.
But Sunil, the top gainer for today remains to be L&T. Yes, of course, not just the earnings, even this got a thumbs up from the brokerages as well. What's your own sense on L&T, given the fact that the stock as a whole has underperformed the Nifty on a 1-year basis? And if we will see the outlook, or rather the growth outlook, that remains to be quite good, specifically with respect to the private capex that the company has highlighted.
Yes, well, I think that, well, I can't talk specifically about the company. I think the guidance that they've given in terms of private capex, I think augurs well for the entire capital goods space. So it's not just that, because as you know, it's a large company and it will not execute all on its own. It will include subcontracted to a large number of mid and small capital good suppliers. So I think it augurs well, and private capex has been the one lagging number for Indian economic growth, which has not been picking up. So I think it's good signs, early signs of that revival means that overall it could be very good for the overall mid and small caps especially, and for the infra cycle and for public sector banks. So I think this was a very encouraging set of numbers that came through. And as you mentioned, more than the numbers, it was the guidance that was the thing. And the reason why so far, because of the private capex not growing, was where companies in this infra space were getting hurt because analysts were downplaying them in terms of saying, when will private caps pick up? But with the green shoots not coming now, seeming to come through at the ground level, I think it's augurs well for the future for the capital goods space. And that's the takeaway I would take from the earnings results today.
Absolutely. Now on the ticker in the lower bottom, as you see, Power Grid results and the margins figure is 8,000. Margins figure is 81.8% versus our estimate of 86%. 82% is what the margin figure has come up. Apart from that, the revenue front as well as the profit front, we see around a year-on-year 7% upsurge in the profit front. The number is 3,653 crore versus 3,412 crore. And at the same time, the revenues have also seen an uptick of around 1.5% at 9,928 crore. The stock is reacting at present, and as we see at 289 to 90 levels. Power Grid will take a technical check on that as well. But we have Siddharth Khemka, Head of Retail Research, Motilal Services, joining with us. Siddharth, will come back to you. Just before we let you go, Sunil sir, one last piece of advice for the market participants. At present, we see a flux-like situation. Let us know what should be the strategy at present, because we have a lot of triggers. The earning season is up and running. At the same time, the interest rate decisions, RBI credit policy and monthly expiry for tomorrow also. On a shorter term basis, what is your view? How should the market participants behave?
So I think that first of all, I would recommend to them to take a slightly medium-term approach, not to take a very short-term approach, because the congestion in the market is likely to continue till there's clarity on the BTA front, I think. But that being said, right, I think because of the lack of clarity on BTA and the FIS selling, I think what you need to start accumulating, and I would say have a consistent buy on dips approach, is on sectors where the FIIs will buy when they come back. So then what stands out is if you look at the large cap index allocation, BFSI is about 30%, IT is about 10%, and FMCG is about 6-7%. So I think these are the sectors where I would say that when FI money comes back into India, and it's only a matter of time, because like I said, there were specific reasons why they went out of India this month. But if there's any good news on the BTA or saying that something will happen, they will come back. And I think that if you keep your focus around those, because those are the things which have underperformed because of lack of FII buying. So I would say pack a contrarian approach. Buy on dips. It's not as if you buy today and immediately go up tomorrow. There could be a series of small corrections happening, but keep sticking with a medium-term approach and keep your eyes open on the FII space, what they are likely to come back and buy. The second is taking a read from the L&T results today. Clearly now the capital goods sector looks like the future will be good. So I think to that extent, from a medium-term perspective, revival of private capex augurs very well for medium-term growth. I encourage everybody now to look at the infra and capital goods space, but again, buy in a staggered way, not to put all your money at one time. So I think those two, if you keep in the back of your mind, along with the capital goods, I would expect public sector banks to lead the financing of the capital goods companies. So I think the loan growth for the public sector banks on the corporate side would be much better than the private sector banks because they are more ingrained in that business for many years. So I think these are the top things that I would keep in mind at this point of time in terms of taking a future approach.
All right, so that's the strategy that Sunil. Thank you so much for taking the time out and speaking with us. But for this, let's also get you some of the tradable ideas from both of our experts, and let's understand which are the stocks that they are tracking at this point in time. And Sharan, you go first. Tell us which are your stock calls for today.
So for today, Shishte, I'm liking RBL Bank. After having a good breakout, it was consolidating, and today it has seen again some positive momentum. So I think this momentum will continue into trade into tomorrow. So you can do a BTST trade in RBL Bank. You can buy at current levels 262. Your first target should be around 267 and 272. Your stop loss should be around 257. Secondly, at one point of time, you can see M&M almost near all-time high. But at the same point of time, Bajaj Auto charts are looking quite weak, and I think it is about to break down. So you can actually short Bajaj Auto July futures. It's a STBT trade just for 1 day. You can short around current levels with a stop loss of around 8120. Your first target should be around 7960. It's a 1:1 risk reward kind of trade.
All right, so that's a take coming in for Bajaj Auto. At the same time, Nagaraj, your quick view on Power Grid, and of course, if you have any BTST, STBT trade at this point.
Yes, Power Grid, after the result, we have seen some cut from the higher levels. Chartically, the stock has been in a range bound action. We have seen recently some upside bounces failed to sustain the highs of 200-day EMA and came down. The range bound movement is likely to continue for some more period. And I'm expecting this stock to slide down to the immediate supports of around 280 levels in the short term.
All right.